It's Financial Smarts Network. Now, here's Andrew.
Hey everyone, good evening and welcome to Financial Smarts Network. It's Tuesday evening and we're here to discuss some real estate. Season's coming up here shortly, so who better than to have in the studio my good friend Quinn Green with Century 21. Quinn, man, welcome.
Thank you for having me.
Always good to see you. So it's that time of the year. We're getting into that time of the year where you will be in demand.
Well, hopefully it's year-round, but
yeah,
we'll take it.
Yeah,
we'll
that's certainly would be nice, right? I guess you're trying to be like me with year-round. If you want a year-round business, just come into the tax business.
Well, the bills still come year-round, so it helps to be in demand all year. Absolutely.
Absolutely, for sure. But no, listen, man, I wanted to discuss real estate, particularly because we're getting ready, obviously, to start getting in gear with real estate. People are starting to think about home buying. It's 2020, new year, new decade. We've got a lot of folks who are contemplating buying. Of course, a lot of headlines that have been coming out since December of 2019, January of 2020. So what are you seeing? What's the trend probably going to look like this year? Because we're seeing all kinds of headlines from a flat year to an up year to Fannie discussing all the new home starts that are going to be slated for 2020 going into 2021. But what are you seeing out there, obviously, being in the industry?
So a lot of that has to do with inventory and where inventory is right now and the cost of money. And it's been pretty busy to start out 2020. I'm reluctant to say busy because as soon as you say that, something in the market changes. Yeah. But it's been active, and it seems as if that people are seeing the opportunities and wanting to take advantage of them. And particularly because the money is, or the rates are really attractive now. You think about what you're looking at for a 30-year, or if you're really savvy, really financially smart, a 15 or a 10. I mean, and those rates are at historic lows now. So you've got more people that are, if they have real estate already, they're looking at possibly refinancing. Maybe they've weathered the storm of the financial crash and done some improvements because they stayed in place, and now they want to take advantage of maybe appreciation, and they're able to leverage that, pull equity out, and possibly go buy something else or get something new.
Interesting. And do you see, obviously, monetary policy always plays a role in real estate particularly?
Sure.
So with interest rates being at historically low levels, do you foresee those continuing on this year? I know in 2019 the Fed got up on an uptrend, and then they backed off after some global concerns,
sure,
possibly. But is monetary policy the only thing that, or the main thing, I should say, that motivates people to buy? We've got a big pool with the demographic of millennials now, of course, right?
Yeah,
so anyone
sure,
from 1990, I believe, if I'm technically correct, from 1990 on, it's considered a millennial. Anyone born in 90 or thereafter is probably getting into kind of the age where real estate becomes I guess a factor in your long-term plans. Then you have others, that I've heard say, why the heck would I want to be getting in debt for the next 30 years of my life, right?
Sure.
And what if my situation changes? So what are we seeing? What's going to drive, I guess, the 2020 or fuel the 2020 real estate sales at this point in time from what you're seeing out there?
Well, it's generally economics. So just from a inflation perspective, that's generally how the Fed Reserve determines what they're going to do with rates. The other piece is this is a busy year for politics.
Yes.
So as you can imagine, with it being an election year,
there's going to be no shortage of excitement.
Absolutely, and it already is, technically.
Yeah,
so a lot of people are watching that. It generally, from the feedback that I've gotten, the Feds are conservative during the election years, right? So just knowing that there is anticipated inflation, you've got the supply of money still there as well. I think for the most part that the rates are going to be flat, and that's kind of what we're anticipating on the real estate side in terms of just economists and folks who who really follow the market pretty closely. And for people that are transaction folks like me, it's exciting because it's like, okay, people want to take advantage of what's out there right now. And you mentioned, the fact that there are going to be new housing starts. But in addition to new housing starts, you've got the resale market that's really, really strong right now. So it's not necessarily exclusively a seller's market, but in certain pockets, depending on where you are, it's still real attractive. And you brought up millennials. So there has been a big focus on millennials just because of where they are in trajectory in terms of the workforce. And just cost of living is still a concern for millennials, and particularly when they're comparing the option to rent versus the option to purchase. And because of the cheap money, the comparison is very close. It's just that commitment of 30 years being somewhere is tough.
Is the commitment, obviously, I'm sure that's always a concern for anyone, right?
Sure.
Whether you're millennial or not. But as far as the price points, I mean, certainly real estate, there's no denying that real estate has gotten, rather expensive in some parts of Atlanta and across the country.
Sure.
Obviously, I don't know if we'll ever see depressed prices like we did back in 08, 09.
Yeah.
You can never say never in life. But overall, is it the, the prices? Is it the purchasing power in a sense? Because millennials obviously are carrying just a boatload of student loan debt.
Some of them. I mean,
Yeah,
not
all of them, of course. I'm not.
Yeah,
not
sure.
not to generalize like that.
But they're
overall,
risk averse as it relates to debt. Like
Okay.
they generally don't want to be burdened by debt because they may have seen maybe their parents or a generation before their parents and what that did for them, in terms of their ability to have a quality of life, right? Generally, when you're coming out of school, you still want to be able to travel. You still want to have fun, etc. And if you get tied down, then sometimes that's a challenge. And a lot of millennials, as they're coming out of school, or if they're in vocational school, or if they're coming out of high school and just going into the workforce, they still want that flexibility, right? And that flexibility, there's a value with that where, not everyone is gravitating toward that. But the other side of it is that the perception is millennials don't want to buy. That's just not true, right?
All right.
What we're starting to see, and what we've been seeing, is that the push for millennials has been more to the suburbs as opposed to in town, which you wouldn't think that.
And I was going to ask you, because you would think, obviously, being younger, you want to be more in town, especially if you live in a major metropolitan area.
Yeah.
You want to be in town. You want accessible access to amenities and venues and restaurants and whatever else might be the case. But you're saying that's obviously not exactly the case.
Well, I mean, what we're seeing trend-wise is that developers are getting smart, and they are creating communities. They're creating experiences. So you hear a lot about live, work, play, and that kind of thing. So instead of you having to be in town to go to the movies or to go out to watch a game or to do something like that, developers are creating these mixed-use communities where you can live in a place and actually have some of that stuff at close access to you. The other piece is millennials are gearing up toward figuring out what the family life looks like, right? So although you're not seeing as many births and the population rate is different in terms of new kids and growing families, the millennials are taking an approach where they're at least positioning themselves to where if they do want to have a family, they're already be ready to go.
Do you think part of also, I mean, to your point of developers going into certain communities or certain areas. Obviously, we're starting to see, for example, maybe this will be the trend perhaps long term in other cities, but in Atlanta, we've had, the Braves Stadium move from downtown out to kind of the suburbs.
Cumberland, Vinings.
Exactly. So is that also a push by, or government also realizing that, hey, we might have to kind of position ourselves in a situation where we move certain amenities to different parts of town to attract development and attract millennials or younger, the younger demographics of people into those areas to be able to have the next spur of real estate growth or real estate sales, right?
Well, that particular park is a unique situation, right? A lot of politics involved in that. Of
course.
And
anytime you get stadiums
it's huge, but and just specific to that development, what they did was they did a heat map to find out where their customer base was. And the majority of the people that were attending the games weren't necessarily inner city people. People were commuting, and a lot of the feedback that they were getting was just the commute having to deal with traffic, public transit, et cetera. It just wasn't convenient. And then on the politics side, you think about the money,
of
right?
Course. And in that area too.
Who potentially had the influence to make that kind of move, because it was a huge shakeup. But the big picture is that you are having developments kind of similar to that have a basically an experience theme, and they're trying to create or appeal to buyers, not just millennials. You have empty nesters, that high net worth folks that have a lot of capital. They're trying to appeal to people and say, hey, look, you can get this experience here. And for developers, if the dirt is cheaper in the burbs as opposed to going inner city,
I mean, but is the dirt really cheaper
sense
these days? I mean, that's a costly commodity in a sense these days, right?
It is.
Dirt.
It is.
Anywhere you look, you're starting to hear some crazy prices out there.
Well, yeah.
For the cost of dirt.
Well, it depends on where you are and how much dirt we're talking about, right? So in general, just across the board, the market is up, right?
Yeah.
So when you start thinking about, okay, where are we in terms of corrections and that kind of thing, you're paying close to top dollar in certain areas. We are seeing some segments where there's pre-recession numbers or close to pre-recession numbers. So for somebody who really watches the market, it's a timing thing, and real estate is all about timing.
Of course.
So for developers, with the big developments, it takes from entitlement to actually grading and going vertical and getting your CO, it could be 2 to 3 years. And they've just got to time it in a certain way. And, if anybody will tell you to make money, you really make it on the buy, not on the sell. So it's a timing thing. And if you get in at the right time, you can really make a good deal.
And that leads to my next concern or question to you is, where are we in the cycle? Because obviously 19 was a great year. It was a seller's market.
It was.
Are you still seeing it as a seller's market? Or is it starting to soften up now with a little more inventory coming out in the marketplace to where we're not going to continue to see the influx of higher prices?
Again, it depends on the area.
Okay.
But I would say for Q1 2020, we definitely have seen the price hike kind of level out. Right, we're seeing properties on market for a little longer, and it has somewhat to do with where we are in just terms of the traditional cycle. Traditional cycle during the cold and winter months, it's generally a little slower, particularly on the residential side, and that has an impact. And then because prices have been inflated so high and they've ramped up dramatically, the buyers are kind of taking a step back and saying, okay, does this really make sense? And fortunately, what that's doing is that's helping to make some of the sellers a little bit more realistic where they might have been bullish before, which is good. And the other piece is just the influx of additional inventory. Because people are seeing, okay, now may be the time to put my foot in the water and take advantage of this before there is a correction. Yeah,
because inventory obviously controls a lot of things in the market. So you've got, I know last year we were talking and discussing things throughout the year. Inventory was tight.
Yeah.
Sellers were getting top dollar.
It was a good time to be a seller.
Bidding wars out there, which is good for sellers, right?
It's great for sellers as long as it can appraise. It's all good.
I talked to a few clients, and they said that every time they put a bid on the property, it was a multiple bidding situation. I think we were looking at
very popular.
We were looking at a foreclosure, one of the very few I was able to find, and that was a bidding war, which obviously we would never get into. But you see that situation. So is that going to continue? Because that kind of scares also buyers away, right? If people feel like, oh, I'm overbuying, I'm overspending for this property. Sure. What happens when, like you said, when a correction comes around? So what are you seeing as concerns from buyers who, particularly first-time home buyers? Are they having any concerns? Are are they looking for something affordable? Is there something affordable for someone being a wage earner these days, working paycheck to paycheck?
I would say someone is always going to be cost sensitive or price sensitive. When you're talking about residential, it's an emotional process. Not everyone is thinking like a financial savvy accountant where they're looking like, oh, where's the value? Am I making money? Blah, blah, blah. A lot of times it's just timing and wanting to have a sense of home, right? And when you're speaking residential piece moves a little different than commercial because you're not necessarily looking at the return on investment a lot of the time. Okay. What you are looking at on the residential side for a traditional purchaser is does this fit my needs? Can I raise a family here? Will I be excited to come home after a long day at work, etc.?
Yeah,
so there's a lot more soft stuff, a lot more emotional stuff that goes into those decisions. And obviously location is a huge factor, right? So I think with having more options that buyers and people that are in the market are being a little bit more conscious, particularly in this market in Atlanta Metro, because one of the biggest challenges we have is traffic. So, if you've got a job and you have an hour plus commute, that's rough.
Yes,
that
rough.
is rough.
Fortunately, I don't have that kind of commute, but hold your thoughts, Quinn. Folks, we're going to be right back after this commercial break to continue on discussing whether you should be looking to be a buyer later this year as the peak of real estate season comes along. We'll be right back.
Monica Matthews, radio host, author, speaker, and musician, is a proud contributor and supporter of Financial Smarts Network. Monica is the host of the popular podcast Monica Matthews, Life, Love, and Liberty, and hosts The Monica Matthews Show on WSB Radio in Atlanta, Georgia. Monica is a passionate voice for freedom from bondage of every kind and holds that God's first purpose is always people and his first priority is always freedom. For more information, find out more at monicamatthews.com.
Hey, welcome back. We are continuing on, as we were discussing before with Quinn. Is this the time to buy? Should you be a buyer if you're thinking about making a home buying purchase, particularly as a first-time home buyer, Quinn, right? So let's kind of discuss a little bit about someone who's kind of on the fence, right? First-time home buyers, whether they're millennials or any other age demographic, looking to buy a home. What should they be considering? A lot of folks obviously, have the mindset that if they're renting, they're throwing their money away. In a sense, other folks like the flexibility.
I would agree. I would agree.
I would too, in a sense, right? But you got the group of folks out there across the country who, like you mentioned earlier, don't like to be tied down and in debt for 30 years in their mind, right? A lot of people are also looking at it that, hey, we've been on an uptrend in real estate for the last, 5, 6, 7 years, however long you want to look at things being well. What if I buy now and then I'm upside down again? Kind of what happened in 08, 09 to a lot of folks. So,
Sure.
What are the concerns that you're seeing and dealing with people out there? And what are people looking, are they trying to time it or are they just trying to find something affordable now, because rents aren't cheap either?
No, rents aren't cheap, and rents are helping to push people to want to buy because they're making that comparison in terms of what the cost of living is. And, I support renting when it makes sense,
Sure.
right? So the other piece is we found out during the financial crash that home ownership is really not for everybody, right?
Obviously not.
Really not for everybody.
Obviously not.
And you mentioned the foreclosures and short sales and that kind of thing. I mean, it's tough. It's a factor or a function of the market. But affordability is a big deal, right? And people want to be able to live outside of just having a house. There's a such thing as being house rich and cash poor. And
Or house
essentially,
poor if you buy too much, right? Because you walk in there and you fall in love with the kitchen and the granite countertops or whatever may motivate you and capture your heart, right?
Yeah, I mean, if you're pouring all of your money into your home, in terms of whatever you bring in a month, and then you can't live. You can't do certain things.
You've
That's
got,
tough.
when you become a homeowner, unlike renting, where you really don't have much responsibility for maintenance. You got maintenance, you got insurance, you got taxes, all those factors, the drivers that are going to change from year to year.
Sure.
Depending on the house that you buy, you either may have a lot of maintenance in the future, or you may not have that much.
Yeah.
So you got to be able to, as I tell people all the time when I sit down with folks looking to buy, particularly first-time home buyers who may not have ever kind of had a good analysis of what it is. When you're paying your rent to the landlord, that's all you've got to worry about besides your utilities, right?
Sure.
You don't have to worry about if taxes go up, if insurance goes up, if the HVAC breaks, if the roof needs to be replaced or anything. But the minute you become a homeowner, so people need to account for all of that and not be house poor.
Yeah.
A lot of people go in, they want to get new furniture as well. Obviously, it's a first-time home. They want to feel, like you said, it's their place, right?
Sure.
All of that takes a bite into the checkbook.
It does. It does. And generally, you recommend that somebody have a reserve,
of course.
Right? So in a perfect world, you buy a property, come out of a renting situation as a first-time home buyer, your mortgage will be roughly around the same of what you were paying. And then you'd have a cushion, being financially smart, you'd have a cushion where if something comes up, like a roof leak or a water heater goes out, et cetera, you'd be able to underwrite that. And if you're really smart, then you're carrying a warranty on certain things, right? You know about that from investment properties.
You have a warranty all too well.
Right. And you pay a deductible, right? So, if you have good counsel, a real estate agent, a real estate broker to work with you, or somebody who knows finance, then they can help kind of coach you through how to put yourself in a position where even though those risks exist from home ownership or property ownership, that you've hedged that risk with some safeguards like warranties, like insurance, et cetera.
Best warranty I ever got was $100 deductible I paid, got a whole new HVAC system out of it.
Yeah, generally, if you've got the right coverage and, the right company and they're reputable, then, when something goes wrong, they'll honor the agreement.
Exactly, reputable for all aspects, right? Your realtor, who you deal with, your insurance agent, what kind of policy that you're getting, and being able to understand that. So that, we'll have a real estate series later in the year as we get into more of peak time to discuss all aspects of it, right? Understanding the closing process, the appraisal process, how to qualify, because a lot of times, I don't know if you're seeing it, but I used to see it in my world when I used to be in the lending industry. People just show up, they're like, yeah, I want to buy a house and I've been looking. And I'm like, you've been looking for what? You don't even know what you qualify for, right?
Sure.
But I know what I want,
yeah.
But that doesn't mean you can't afford it.
Well, buyer education is huge, right? So really educate yourself on the process.
Have we seen more buyer education than we had a decade ago? Because I know back in the days I was spending more time in the industry, and in particular on the financing side. We didn't really have a whole lot of buyer education. Money was going, was being loaned out there like it was going out of style. If you could breathe, you could get a loan, which was part of the issue we had. Times are different now. If you have a 500 credit score, you sure as heck ain't getting anything.
Let's hope not.
Don't tell me that we have those loans again, Quinn.
You'd be surprised. So the real estate market is a cycle, right? And you'll see that in the lending space they'll be ultra conservative, and then they'll loosen up the reins on underwriting, and then they'll start writing loans that may be not good loans.
Fannie expanded into now going from 45% DTI to 50.
Yep.
I read just very recently, just weeks ago, that JP Morgan's contemplating getting back into FHA. So is that an indicator also for us that that banks are getting back into the more the sector where it's a little more risky? Or is that an indication that really there's a demographic of people who can't afford certain kinds of homes at certain price points, and now they're obviously lenders are going to get into that to be able to make it affordable because the market's getting ready to kind of, just kind of be an even keel between supply and demand this year with not as much activity as they'd like. What are those factors?
You might end up having to have a whole nother segment on that piece because the finance companies, they have some metrics that they need to meet too in terms of new loan productions and that kind of thing. I was at a subdivision yesterday, actually, and as soon as we got, and this is new construction, as soon as we got on site, one of the agents mentioned to me as my client was kind of walking the property, hey, we've got 100% financing. We've got this program. What? We're doing,
100%. Man, I haven't heard of those back since the 06, 07 days.
You'd be surprised. And even the rates that were being mentioned were really, really, really low. And part of that was trying to entice that particular client to go with a preferred lender with that particular builder.
Developers always do that.
But just the fact that there was mention of 100% financing.
I was going to say, I mean, who's offering? Have you seen other than that? I mean,
I really hadn't been looking for it. Fortunately, I've had, clients that have some reserves and they're prepared to put some skin in the game, if you will.
Well, because if you don't have any skin in the game, we saw that last time around where people will walk away. That's why we had record foreclosures, an unprecedented amount that we've never seen historically in this country, because there was no skin in the game. When someone has zero, money in it, they have no reason not to walk away if something happens.
Well, I'd say less of a reason for sure. But, in terms of just the affordability piece that you brought up earlier, for some people, the affordability piece is predicated on how much money they have to cash outlay to make that transition. And I'm not necessarily a supporter of 100% financing, but I understand that there's a unique market that caters to. The other piece is, when you're dealing with potentially veterans, there's certain programs that for veterans,
that's understandable.
100%.
Exactly. That's different. I'm talking about someone, who maybe maxing out on their resources and is getting 100% financing.
Yeah.
So, you have, if you're a wage earner and you work 20 hours less for one pay period, and you're tight and you got 100% financing, you're maxed out. I mean, you're getting into potentially some financial challenges. That's always a concern for me when I see folks getting into something maybe that they shouldn't be getting into.
Sure.
So the question is, for this year, what advice would you give someone based on what you're seeing if they're on the fence? They're looking to be a first-time home buyer. Obviously, there's concerns from every angle. Are we at the top of the market? Am I timing it right? Should that even play into someone's buying process? And what should they be looking for? How do they make a decision if they should move forward as we get into May, June, July, and we get into the peak of the market?
So my guess is this is when I go into my commercial about what I do and how you really need a realtor, how you really need a broker to get you in the market, because
I'm setting it up for you.
every time is a good time to buy. But I encourage the home ownership. I encourage the home ownership, one, for the perspective of just building up your network, building up assets that potentially you can leverage down the road. And, creating a legacy, right? And if you're going to have to pay to stay somewhere. Everybody has to live somewhere. So why not put yourself in a position where you can benefit from either appreciation or equity or that kind of thing? I just think that makes sense. It still is best to get educated first before you make that move. Hopefully you pick the right broker, the right agent to assist you with that, or even financial advisors. I mean, financial advisors are huge at making those decisions, particularly around tech, because we're coming up on, Q1, Q2 tax time. People have potentially, hopefully, a return that's coming. If they have a refund, how do you not just go blow that on, a TV or a elaborate trip?
I'm a stickler on using your money wisely.
Sure.
Especially your refund, because a lot of folks are getting, the average refund, I think, is around $3,700, $3,800, $4,000, give or take. But, there's folks who get more and obviously those who get less.
Yeah.
But, man, that's, you save up. That could be a down payment. I think 3%. There's programs out there with 3%.
Absolutely.
So that could be a down payment. Maybe you got a little more saved up as well.
The more you have saved up, the better. We're always on the real estate side. We're going to be advocates of savings, reserves, et cetera, because there's always those things that come up that you don't really plan for.
The unforeseen stuff.
Absolutely.
So it's so someone's on the fence. If you have to give them a few quick tips as we're kind of getting towards the end of the show.
Get off the fence. That's my quick tip. Get off the fence. Call me. Let's see if we can get something worked out. Exactly.
But what should the mindset be as far as even starting the process, right?
Sure.
Because they just can't call you up and say, hey, Quinn, man, I want to start looking at homes today, right? I mean,
they can. They're just going to get a certain response from me.
Which is going to be one.
Right. Baby, let's have a consultation first. Let's sit down and get a plan together. Absolutely.
Okay, the plan. That's perfect words, right?
Sure.
So what should that plan, before someone even ever calls you, or anyone for that matter, what should be the plan? What should they start focusing on if they're serious about 2020 being the home buying year for them?
Sure. I mean, if they want to take some time just to do some diligence on their own prior to engaging a professional, then I'd say definitely look at where you are in terms of your debt.
Okay.
So getting familiar with what your credit score is, how you can pay some of your liabilities down or the things that you're paying on, really get to a point where you're comfortable with just your monthly overhead, right? Outside of that, making sure that there is some type of reserve that you have or savings, because buying a house is a huge purchase. A lot of times for people, that's the most expensive purchase people make in their entire life, right? Yeah. So just really getting financially prepared in terms of making sure you do have reserves to go through that process makes sense. You know, with the age of information and the internet, there's a lot of information online that you can look up. And particularly when you talk about, you know, secondary market mortgage holders like a Fannie Mae, Freddie Mac, et cetera, they've got a lot of resources on their websites that talk you through the whole process of getting prepared to buy a home.
Okay, because I was going to ask you about that, is where are the resources? What should people look for? Because obviously with technology, everyone has access to the internet.
Sure.
And so for me, you know, being educated, I mean, having a good team around you between, you know, financial advisor, the realtor, an attorney, an accountant, tax professional, for example, that's all a team that you can work with. But even before you ever hit those folks for advice, there should be some element of education on your own to some extent, right? Because they're going to call you up and they're going to say, Quinn, I want to buy. And obviously one of your questions is going to be, well, you know, price points, what areas and whatnot. So they should do some sort of self-educating and figuring out, you know, can they afford certain areas and certain price points way before they ever call you, because you're not going to put them in a car and drive them around unless there's some certain predefined things that have happened beforehand, right?
Yeah, they're going to have to talk to their financial bank, possibly, or their financial lending institution and get approved. You know, you can get qualified, you can get approved. I recommend getting approved because it's a little bit more strenuous. You do have to provide certain documentation, bank statements, etc., tax returns.
Particularly if you're self-employed. For self-employed folks, though, they should go through more of an approval process too, right? Because they're, you know, it's just getting pre-qualified is one thing. Getting approved where the lender is seeing your taxes and, you know, your financials and everything and feels comfortable that you're going to get qualified is a totally different story.
Sure. So a lot of people don't know what resources are out there on the financing side of things. And a lot of times when we get calls on the real estate transaction side as a broker, agent, realtor, that'll be the question is, okay, where do I start? And essentially, I always tell people, like, where is your money now? Who are you banking with now? That's a relationship you already have. That's seamless. So go to that lender, go to that bank, go to that brick and mortar, credit union, et cetera, and just tell them what you're looking to try to do. See if they can do a approval for you. And then from there, it makes sense to possibly engage a realtor or a broker, and then maybe compare apples to oranges, have them give you a referral, maybe lenders or mortgage brokers they've dealt with. And then you can compare rates, compare fees, points, et cetera, and just see where you're going to get the best deal.
Final thought. Are you...
Yes, I am.
You didn't even know what I was going to say.
Taking on new clients, I thought it was what
I know you're taking on new clients. You take on new clients in your sleeve, too.
Absolutely.
I can text you at 2:30 in the morning, 2:15 precisely, and you'll reply.
It's happened before. I don't promote that, but, you know, consider you're my tax guy.
Well, I'm not going to give you folks out there his cell phone. I keep that to myself so you guys don't text him at 2:30 in the morning. But if folks are looking to get pre-qualified as we wrap up here, were you a fan of big banks, small banks, credit unions? What's probably a particular easiest path for them to start with?
I'm a fan of any lender that can get the financing done.
Obviously, right? Because that's the only way you get paid, right?
Absolutely. But where I've probably seen the best value for my clients is working with credit unions. They tend to have the more attractive rates and lower fees, if you will. But, you know, the big banks, there's some value. I mean, you can make a business case for any one of those lending vehicles. But I would prefer someone check with whoever they're banking with first. And then if that doesn't work, reach out to a realtor get some referrals, and then just get that process started.
Great. Folks, we are out of time, but we've touched the surface of what we're going to be discussing in the weeks to come as we get into the real estate series with the home buying process. Listen, we hope you've enjoyed it and gotten some valuable information out of this. If you need to reach out to Quinn, where do our viewers get a hold of you besides texting you at 2:15 in the morning?
Absolutely. So if anything, you can obviously find me on the Financial Smart Show. But in addition to that, I am on LinkedIn. I'm on most social media platforms, and I work with Century 21 Connect Realty. So if you go to Connect Realty, C21ConnectRealty.com, you can find me there. Also, www.greenstreamproperties.com.
Greenstream, he loves the money. Listen, folks, it's been an awesome evening. Thanks for watching and tuning in. Next Tuesday, same place, same time. You can catch me on Twitter at Andrew G Poulos, Instagram, LinkedIn, Facebook. Why don't you tweet out to us? Let us know what you'd like to hear, more about the home buying process, so we can give you information that is valuable and impacts your life. Have a blessed evening, and we'll see you next week.